Screen?
Yes, sir.
Okay. So about the camera, let's see if someone from the coordination team comes in, I will ask them. You have your Wi-Fi. हाँ म्हणजे hotspot, sorry. Okay. Okay. So then I will copy the file in local machine and you take it from there. But you already have the file, right? Last time. Correct. Everybody, let's continue uh, with what we were doing last session, and that was building this case on sugar factory model. So we started with a project analysis where we said what if we want to evaluate if setting up a sugar factory is a profitable business proposition or not. And the first thing we made was this scheme where we figured how we will be approaching. Uh, we would be forecasting the statements, and for statement forecasting, create supporting schedules like the IDC, like capitalized interest component, then your revenue and cost analysis, then other balance sheet schedules. And with that, we decided to complete the statements and find the IRR and DSCR. So we will look at presenting the case from both perspectives, equity as well as the debt. For the debt, you will need to analyze or present the coverage ratios. We will do that. So last time we started with the IDC and we completed the IDC part. And that without and camera color. So is the camera better now? Yeah, yeah, I think you can see me like okay. So yeah, so first thing we did was we figured out the IDC, and with that we were able to figure out the overall cost of setting up the project. It was 1200 million as my hard cost, the land location cost 95 million as my top, the interest during the time. Then we said, okay, fine. In the first 2 years, if you are raising debt, you are building the facility. Then in the remaining years, you will operate the factory and you will get some income out of that. For the case, we had two primary lines of revenue. One was sugar, another was sale of electricity. So you will get some money by selling sugar and processing, and then processing the remaining raw material. You will get will generate electricity, and that's what will generate sales. So we went into a little more of the details of how revenue was earned by crushing sugar and how to take into account utilization levels, so on. And same we did for power, that is electricity. And you will see around 35% of the sales was coming from electricity, and remaining 65 was coming from sale of sugar, which is a primary line of. Then we started analyzing the cost. The perspective here was to keep the balance sheet and income statement in mind. Balance sheet line items like BOGS, operating expenses, interest, depreciation. Those were the ones which we wanted to find out. So we started with BOGS and operating expenses. Then we did the analysis of debt that gave us the interest. Now, from the balance sheet point of view, you would also need fixed assets, you would also need equity, You will also need working capital. So those are the line items which are left. Okay. So till here we have done it last time. Now, before we start, everybody see that you have the file here. If you don't have it, let me know. I can share it again. Okay, till here, students online. Annual expenses में interest expense row number 23 आपका complete है?
Yes, sir.
Okay. So now we start with fixed assets. So the next thing we want is to change the fixed asset schedule so that this can also help us get depreciation in the income statement. Now, if you go back to the assumptions page, year 1 and year 2, what is the amount of assets we have added? We have already estimated that. First year we have added 647 million and the same we have added in the second. So we will put the formula here. Remember, addition plus the last year's balance, that is to make the line item cumulative. The formula would be last year's balance plus, if you go to assumptions, the asset added in the current. Here is the formula. And when you drag, you will see that added asset or say fixed asset increases first year, second year, and then remains constant going forward, which is your total project cost. Here is the formula for fixed asset gross. Now, yeah, gross asset is reported at historical cost. Okay. So the historical cost of purchase of the assets was 1295 million. So your gross assets are reported at 1295. Correct. Increasing to 1295 and then constant. No, you don't have to put a dollar sign there. Correct. Because both years there is the addition of assets 647 million. Then there is none. Correct. 1295 for all the years. Then let's calculate depreciation expense below, and then we will compute the accumulated depreciation. So our depreciation expense would be total assets into the rate of depreciation. We will follow the Companies Act rate line. Later, we will build the IT depreciation also. So here we have 129 as the depreciation for all this. Rate of depreciation being 10%. Yes, for the rate. Correct. And then 129 is my depreciation for each year. And in the balance sheet, I will have cumulative last year accumulated plus amount of depreciation charged in the current. Here is the accumulated or cumulative number. Simple formula for accumulated depreciation. It will be 1295. Assets will get fully depreciated by end of life. Last year accumulated depreciation will be 1295. Therefore, net assets will be 0. Hey, why? So last year asset is becoming nil, and that is for the net. Formula here, accumulated depreciation formula. Last year accumulated plus amount of depreciation charged plus current. Also you did it from year 1. It is from year 3. Yes. First 2 years are in development, so there is no correct. Correct. Okay. And then net asset is nil. Gross minus accumulated. Okay, till here online students are we done till here?
Yes, sir.
Correct. So with that, what we have done is we've got the fixed assets that will go back into the balance sheet and depreciation expense which will go back in the income. But for calculating tax in the income statement or the actual amount of tax to be paid, you will need the IT depreciation as well. So let us in the fixed asset schedule, let's also calculate the WDV depreciation which is followed by IT. So first, okay, you try to make the WDV depreciation and I'll give you the starting point. Second year ending balance of fixed asset is to be taken from the assumption stage. That is the total project cost, 1295. Second year ending balance to be taken from 1295. Okay. Can you complete the schedule and tell me fixed asset end for the 11th year? Complete the schedule and tell me fixed asset end for the 11th. Hmm? From third year onwards. Yes. Again, same depreciation will be charged from year 3 onwards. Fixed asset end for 11th year. Correct. And last year. And we will correct. So we will completely depreciate it in the last year and therefore the asset ending balance will be nil. So you'll have to adjust that entry accordingly. So we'll also do it on screen. Opening balance is same as previous closing. Depreciation IT is opening balance to rate is 20%. Closing balance is opening minus 30. Okay. And then we drag it all the way to the end. And in the last year, just change the depreciation formula to is equal to opening balance. So closing balance will become nil. Then you will take it as sell off of assets in the last year. So at scrap value. Correct. Capital loss you will show it in the income statement and again it will amount to the same thing. In the 12th year it will be. Yes. Correct. Destroyed means scrap. So generally you will have some scrap value. So you will write it down to the scrap value amount. And then if you sell it in the open market, then the capital gain or capital loss will get accrued to the extent of the over and above the write off. Then, so this depreciation IT is what you need in your company tax, sorry, tax calculation. Now let's do the working capital schedule. So let me explain the other. So we are going to maintain an inventory of 40 days and creditors of 50. Now, our inventory or creditor will be recognized as COG. Now, COGS that we have found out is for raw material expense only. That is, the raw material expense will consider it as COG. Others are operating expenses. So, your inventory and creditors will be calculated on stock. That is raw material. Now, this raw material expense is for full year, 365 days. And you are going to maintain inventory for all 365 days because sugar production might happen for 240 days, but sale will happen throughout the year. So, using the daily COGS, so first let's find daily COGS, 403 million divided by 365. So 1.1 million is my daily COGS, and I am maintaining 40 days worth of inventory. 40 days worth of stock. That is 44 million will be blocked in inventory. 44 million. And out of that, some of it will be given by credit. So 403 divided by 365 into number of days 15 credit. That comes out to 16 million. So inventory of 44 million, that's my money block, and 16 million of creditors, that's my current liability. Will be funding some of my inventory requirements. So my net money block will be difference of current assets and current liability, which is my working capital, 28 million. Increases to around 48 million by the last. Yeah, creditors, here it is. Same, logs upon 365 into number of creditors. Okay. So again, another requirement of working capital is that. So now you can see from the balance sheet point of view, a lot of things are getting taken care. Last item is equity capital added. Again, remember equity added was already calculated in the assumption stage. We added already calculated in the assumption stage. So we'll just take the number from there. No, from year one on. Then it is not correct. That is because it is the added number. So equity capital, which is balance sheet number, will be cumulative. So last year equity capital plus amount of equity added in the current. it will automatically get rounded because comma style is applied there and decimals have been reduced. So equity capital is 453 million for all this from year 3 up to year 12. Okay, is the number matching? 453. Okay, that's it. Number might not be acting. Okay, students online, have you got it till here? Any doubt? Let me know.
So, can you please explain the working capital schedule once?
Which one?
So, working capital schedule.
Yeah, working capital. Okay, let's do the working capital schedule again. So details or assumptions for working capital are as given. 40 days worth of inventory we will maintain and 15 days of payable or creditor we will get as a grace period or credit period from our supplier. Now inventory and payables are both recognized as COGS. So 403 million is the COGS and you will be maintaining the inventory for the entire year because sugar production might happen only for 240 days, but sale will happen around it. So this 403 million is my COGS for the entire year. So my daily COGS is 403 divided by 365. ये एक दिन का कॉस्ट हो गया मीन्स उतना आपका सामान इन्वेंट्री में पड़ा होगा into 40 days of inventory because that's the assumption. Maintaining 40 days worth of inventory either in the form of raw material or work in process or finished goods. Okay, so that's how we are getting the
Yes,
inventory.
sir.
Correct. And then out of this, again the same 403 million COGS divided by 365, that is again daily COGS into 15 days worth of credit period or the amount of credit suppliers are providing.
Yes, sir. Got it now.
Correct. And current asset minus current asset is working capital. Then we have
Yes.
equity capital, equity added. Okay, got it till here?
Yes, sir.
Correct. Now, all the schedules and costs that we wanted to compute are done. We've got all of them. It is going to be very easy to make the income statement and balance sheet. Yeah, some effort will be needed obviously in the tax calculation. So we will do that as and when we reach there. But first, for the income statement, everything is already calculated everywhere else. So now, income statement is going to be just a staging page. So everybody come to the income statement, and what you have to do is link up all the line items from the other pages. Do not complete interest income. वो अभी नहीं करना है आपको. And you find and tell me EBT for year 3 and year 12. Third or 12th year का EBT बताइए without doing interest income. Every other line item has been calculated somewhere or the other. तो आपको वापस कैलकुलेट कुछ नहीं करना है. Just look at the table, go to the respective pages where we must have done the calculation and pick the numbers from. What is the EBT for year 3 and year 12? So you will see making the income statement now is fairly easy. All you have to do is just link the line items from other pages. So these books are being made as per which perspective? Correct. So we've been making all the statements always as per the Companies Act. From the investor's point of view, understanding the line items is more sought after. EBT, EBT. Interest income you keep blank. Without, yes, without that, EBT, negative for the first, correct. How much? 21. नहीं, माइनस की जगह इज इक्वल टू साइन चलता है. नहीं तो प्लस की जगह इज इक्वल टू साइन हो गया फॉर्मूला. जस्ट इन्वेस्टिगेट. Correct. Minus 21 is right. For year 3 and last year, yes. Fair enough. In the meantime, I'll also put the numbers on screen. The sales you will get from the annual sales page. You need to obviously take the total sales, raw material cost, sugarcane expense. I'll just link up all the lines. 200 and correct. Salary, consumable, other and repair. Again from annual expenses. Now for depreciation, we have calculated depreciation in two ways. One is the straight line and other is the WDV method. And we are always making the books as per the straight line method. And then what to do with the WDV depreciation? We will use it while we are building the tax schedule. So let's take the straight line depreciation. Interest also we have calculated in the annual expenses. We will put down the in-between formulae. All are profit numbers, so we are just going to minus everything. Sales minus raw material gives me gross profit. Gross profit minus sum of all the expenses, operating expenses gives me EBITDA. EBITDA minus depreciation EBIT, and EBIT minus interest expense plus interest expense gives me EBIT. Yeah. Sorry, have been added here. Correct. Total sale दिया ना, तो उसमें वो already considered है. Correct. So first year is a loss given in the company tax 21 million, and the last year there is a gain of 207 at the EBT level. Everybody, students online, is the EBT matching?
Yes, sir.
Correct. So you can see that making the income statement is now very easy. Everything has been calculated everywhere in the other pages. All you have to do was just get it back into this sheet. Now the next part, that is income tax payable and deferred tax. Cannot do it without solving for the entire tax schedule. Okay. Now before we proceed to solving the entire tax schedule, let us change the name of these two line items here. And the reason why we are doing it is because in the tax schedule, these two line items have been named as net tax payable and change in deferred tax liability. So after we complete the tax schedule, we will get these two line items, and these line items will flow it back into the income. So let's change the labels here as net tax payable, change in GTL. So that once you calculate it there, you can just link it back here. Okay. And that is EBT minus net tax payable. Okay. Now we want to complete the tax schedule, and once we do that, then these two line items can be imported from the tax schedule. So come to the tax schedule. Again, first 3 years, nothing much to be done in the tax schedule also. It will start from year 3 onwards. But before you start, let's just put a couple of formulae, and these are the answers which we will compare. Okay. So first thing you do is come to cell number Q17. Okay, Q17, and put a formula there as sum of all the line items to the left. Here is the formula, sum P17 to P7. That's the number. That is the number which we are going to tally. So I'm going to ask you to complete the schedule, and this is the number that will keep on tallying. Okay, and then copy this formula to row number 22 and to row number 31. So I have this sum formula in 3 rows: Q17, Q22, and Q31. And in row number 24, you have the line item MAT paid over corporate tax. We can delete that label. No need to find that out because the same we will calculate in math credit addition. So in our sample example that we did for tax, there is no line item like math paid over corporate tax. It is directly math credit addition. We use that. Now, step by step, you complete the entire tax schedule and the entries which we are going to match, sorry, 5 entries which we are going to match. First, you have to tell me 12th year, what is the taxable income? Then answer in cell Q17, then in Q22, then in Q31, and last value of deferred tax. Like that. So step by step, let's do it. Now, how are you going to do it? So where is the reference? So go back 2 classes, and there was this tax case. Open that file number 8 and use this as a reference. 8 number 5 you can use as a reference to solve the entire tax case. First entry you tell me is what is taxable income for year 12. 12th year का taxable income कितना है ये आप for year 12. Okay, let's do it on screen. EBT, we will take it from the income statement, same as EBT. Straight line depreciation, we will add, we will subtract. So I will put a minus sign there itself to the WDV depreciation. This first year is going to be a significant loss. 162 is correct. Let it rest. But you subtracted it. Okay, so here is the formula on screen. Everyone check 162, the taxable income for last year, first year loss of 151. So as per Companies Act and IT Act both, we have a loss in year number 1. So whatever is the loss as per IT Act, that will get carried forward. Now everybody complete this carry forward schedule and tell me value in cell Q17. After that, we'll take a break and then remaining part we'll do post. Till here, are we done? Any doubt? Online student, have you got the numbers?
Yes, sir, got it.
Yeah. Now observe the tax case and step by step try to solve it. So you will have to go through the formulae, the 8 number 5. That probably because of that it might show in a different number. Hmm. So addition will happen when there is a loss, and set off will happen when there is a profit. Correct. And it is getting adjusted in which year? अरे, नहीं लास्ट में कैरिड फॉरवर्ड लॉस तो जीरो ही हो जाएगा, वो एडजस्ट हो जाएगा इन ईयर 5, 6, 7. Yeah, the set off also needs to be fixed. Otherwise, it will keep on accumulating the loss. Yes, even online. Any answer in cell Q17? Yeah, it will be dash in the last 3 4 years.
Sir, is it 254?
Here 254. Okay, let's see. Correct. 254 is right. Good. Let's do it on screen. So I will start with beginning carry forward losses is same as last year's ending. First year's beginning is same as last year's ending. Then we will say if there is a loss, then we will carry forward the loss, else nothing to be carried forward. Okay. If there is a loss, then carry it forward, else nothing to be carried forward. Set off. Set off will happen only if there is a profit. First check, is there a profit? If yes, then how much should the set off be? That will depend upon what is the profit amount or absolute value of opening carried forward. So that you drop the sign. You just compare the number. Whichever is the smaller, that one will be adjusted. Okay, set off formula and then add on for the ending balance of carry forward. Carry forward loss ending balance. Okay, and then taxable income is if there is a profit, then profit minus set off is what you will tax. This is the profit which on which you will pay tax. There is the after set off, after carry forward losses have been adjusted, whatever is the remaining profit, that one tax. Correct. Therefore, this into 15, 25%. 254 is correct. Good. Everyone check. Have you got it till here? So we are still left with MAT, then set off of the MAT credit, and then computing the deferred tax. That. So let's take a break here, and then post the break, we will complete the tax schedule, and hopefully we'll also complete the entire model by the next break. So that in the last session today, we will just have a cursory discussion on why project financing is important in the overall scheme of things. Great. So let's take a break here and let's meet back in 10 minutes and then we will continue with the case. Online students, any other doubts you have, let me know. Okay. If not, let's take a break. Okay. Should we continue? Aryan? Let's proceed ahead and let's see how much is the tax payable number coming. So you compute the math. Now for math calculation, you will put the if condition again. If there is a profit, then you will apply math. Otherwise, here 3, it will show minus number in math. That should not happen. Minimum alternate tax by definition is if you have a profit as per book, then minimum you will pay from. So tell me the number in Q22. If लगाना पड़ेगा. Yes. In our sample case, if is not there in the math, so here you will have to put the if. Okay. And Q22 number is yes. And also screen max. Correct. So PBT and book profit is the same. So we'll first link the PBT from above. Then for math, you put the if condition if there is a profit. Correct. Proceed ahead and tell me the answer in Q31. So for the math, you put the if condition if there is a profit, then profit into 20%. And as per the rule, you calculate tax as per both methods, and the higher is what you will pay. So 294 is my total tax payable. So you can see that corporate tax to be paid over the life was 254, but because of the MAT, 294 is what you have to pay. So 40 is the excess that you are paying to the IT, which is what you should get as a rebate in the MAT credit set off. So tell me the answer now in cell Q31.
So 254.
254 is correct. Good. So that 40 excess credit that you have will be adjusted and the total payable will be 2. Proceed ahead and tell me TTL. In the meantime, I will build the credit set of opening balance again same as previous closing. Addition to credits will happen. Hey, Q31 में कितना? Yellow cell. So MAT credit will be added if in a given year MAT is more than corporate tax. How many credits will I get? MAT. Corporate tax. The excess that I am paying is to be considered like an advance with the IT. Yeah. No, I'm just behind. I'm just doing formula for credit addition. Any excess MAT to be paid over corporate tax will be considered as an advance. And then MAT set off. If corporate tax is more than MAT, if reverse is the case, then set off will happen to the extent of corporate tax minus MAT or opening credit. Where 254 is the number that you will get. So beginning plus addition minus ending credit, sorry, minus set off is equal to ending credit. This time you will subtract the set off because the signs are same. And net payable will be tax payable minus MAT. 254, therefore, will be the ending balance. Ending balance is beginning plus addition minus set off. Net is MAT set off, not ending, set off. Ending is cumulative and set off is periodic. Okay, and therefore book profit. Okay, so 254. Then book profit is same as PBT. Again, if there is profit, then tax expense would be 25% of the profit. Again, in the income tax provision or income tax expense, you will have to, the if condition, there is a loss in the year one, Last answer is 52, correct. And therefore, change in DTL will be income tax expense minus net tax payable, or income tax provision minus net tax payable. Difference is the amount shown as a tax expense but not paid. Therefore, it ends up creating a liability, and deferred tax liability will be cumulative value. Which one? Liability? Yeah, deferred tax liability is cumulative value. Last year balance plus change in detail. Now, ideally, yeah, check everybody. Are the answers matching till year? Students online. Last year's detail is plus 5. Is that matching?
Yes, sir.
Correct. So, ideally, the deferred tax liability should have become nil over the life of the project, because both depreciations have made the asset balance zero. But in the corporate tax calculation, you also get a set off of prior losses. So if you look at it here, whatever were the losses were adjusted in the future profit. But the same is not happening in Company Act. Company Act books में जो लॉस है आपका वो कैरी फॉरवर्ड नहीं हो. So therefore the tax expense is getting calculated on this entire amount 1036 का 25%. Okay. Whereas in the company's IT book, you are calculating the tax on 1014. So there is a difference of 21. Okay. तो 21 का जो लॉस है कंपनी एक्ट बुक में वो फ्यूचर प्रॉफिट में एडजस्ट नहीं हुआ. Therefore, income tax expense that you can see here is higher than the provision or than the payable amount by 21 ka 25%, which is around 5 point something. So if you look at this, if I copy and paste this formula here, this will come out to 259. And that 5 liability is the difference. So this will remain as permanent going forward. Okay. So ये जो 5 है, and this, why is this more by 5 is because here when there was a loss, you did not get a rebate in tax expense calculation. तो उसका वो 5 आपका liability में दिखता रहेगा. Okay. Ideally, the number should have been 0. Okay, it's not 0, and that's why this explanation of the same. Now that you have the entire tax schedule, come back to the income statement and link net tax payable and change in DTL, and tell me what is the revised PAT for the last year. आपका PAT कितना आ रहा है last year? After considering net tax payable and change in DTL. Formula? Where in the income statement? In where? And you need to add change. Added change. Okay, let's see. So net tax payable, we will link it back. From row number 31, you take and change in DTL from row number 36. And once you do that, last year's balance comes out to 155. So here's the formula of net tax payable from row number 31, E31. Is column number correct? Okay. 155 is the number we are looking for. Students online, confirm the value. Hmm.
Got it, sir.
Correct. 131 बराबर तो है. Which is not matching. 49. अभी तो मैच हो रहा है. Where is the doubt? Correct. मैच हो रहा है. 143 बराबर है. कौन सा 41? Okay, okay, okay. You are saying कि net tax table का number कुछ और. लेकिन you must have linked it from somewhere. Where is it? 31. 51. 24 and 25. कुछ गड़बड़ हो गया. Let me see the numbers. Table का. ठीक. Okay. So it was getting accumulated. Maybe 2 times the error must have happened. So there was a minimum in between the two. Okay, correct. Now let's proceed to balance. Okay, making the balance sheet is very similar to how you did the income statement. All you have to do is just link up line items from the other pages. So everybody, first thing you do is tell me total shareholder equity for the 12th year, and then tell me total liabilities for the 12th year, and then tell me the error balance in the 12th year. Make an idea. Everybody. Total shareholders equity for the 12th year, then total liabilities for the 12th year, and error balance in the 12th year. Nothing needs to be calculated. आपको कुछ भी calculate नहीं करना है. Everything is already computed in the other pages. Just link it from. Correct. Remaining years. Correct. We have already calculated most of the line items, so all you need to do is just link it up from there. Correct. We will assume zero dividend. No. Yes, everyone, students online. Tell me total shareholders equity for last year. First 2 years it will be zero, reserve and surplus. So last year's number is नहीं कुछ गड़बड़ है. All numbers have to be cumulative. So we will also do it here on screen. Correct. Starting with equity capital, we will take the number from annual expenses page. Is total shareholders equity you are saying? The total की reserve and surplus. Okay, let's see. Must be correct. You have done cumulative, right? Yes. Last year's reserve and surplus plus PAT for the year 1 plus PAT for year 1. The total is coming out to 1209. Is correct. Here's the formula for reserve and surplus for year 1. Now tell me total liabilities and shareholders equity for year 12. Let me. You have already calculated. Let all the line items have been calculated in the other pages. No need to compute it again. Yeah. Correct. So debt, we are making the balance sheet at the end of the year. So we'll take closing debt, deferred tax liability. We just now calculated in the tax schedule. Again, remember to select year 1 to year 1. That means we are going to take the numbers from column E. Same with creditor. Get that in the annual expenses page and add the liabilities along with shareholders equity. Get the last year's total liabilities as 1242. Everyone check. Okay, 1242. Is that matching total liabilities? So you have to add shareholders equity and the other liabilities. पूरा लेना है. Detail you have to take from the last row of the tax schedule and you have to start from column E. So first entry should be from column E. ये फॉर्मूला आप चेक कर लो. 37 लिखा है क्या? C37. From annual expenses E41. Column year and year. So you will see that is why the template is made. So year 1 will be represented here E column only for all pages. That way formula consistency can be easily made. ठीक है. Now complete the asset side and tell me what is the error in the last year. Students online, without completing cash, balance sheet में error कितना आ रहा है last year? Can you tell me without completing cash, what is the error in the balance sheet in the last?
So 1165.
For the last year,
Yes, sir.
okay, looks correct. Good. Let's do it here on screen. First, fixed asset gross is already calculated there. We'll take both fixed asset gross and accumulated depreciation from the annual expenses page. Cash, where should we get the cash from? Where should we get the cash from?
The cash flow statement.
Correct. EOP, cash balance of cash flow statement. So whenever we complete that, balance it will balance. And inventories from annual expense. So here are the numbers for asset side 1165 looks correct. Good. Now in the cash flow statement, we will just have to change one table there. In the meantime, you can start with the cash flow statement and tell me cash flow from operation for year 12. Again, from annual expenses. फिक्स असेट का फार्मूला ही कॉपी पेस्ट नीचे कर देंगे तो भी हो जाएगा. Correct. So error balance in asset side is, sorry, balance sheet is 1165. नहीं, इन्वेंट्री हैव यू लिंक, वो भी आपको ई कॉलम से ही करना है. The annual expenses, go to the E column and take it from the E column. Okay. Now 1165, right? Error. Okay. So cash flow statement में एक ही लाइन आइटम के नाम का चेंज आप करो, which is it is written there as taxes paid. Instead of that, you change the name to net tax payable. And tell me CFO for year 12. One thing you have to remember, inflows positive, outflows negative. If it is an asset, old minus new. If it's a liability, new minus old. Follow these rules and make an attempt on the CFO for year 12. साइन पे ध्यान देना है आपको, क्या प्लस होगा और क्या माइनस होगा. Either you can take tax schedule or you can also get it from the income statement. CFO for last year is okay. Let's see the number. First of all, again, E column should be linked with E column. I'll start with PBT. We will take it from income statement. Depreciation also will take it from income statement. Then inventory is an asset. So from balance sheet, we'll take last year's inventory minus current year's inventory. Old minus new for asset. Yes. So if I drag the number, they look something like this. So throughout the life, money is getting blocked in inventory. Then change in creditor. Creditor is a liability. So current year creditor minus last year's creditor. Okay. And net tax payable will come with a minus sign because it is tax to be paid. पे करना है 292. Net tax payable. I'm taking it from the income statement. You can also take it from tax schedule. Either is fine. दोनों में से कोई भी लीजिए. आंसर सेम ही रहेगा. And cash flow from operation में सिर्फ ऐड हो रहा है. Because we have already shown negative sign to outflow following the cash flow statement convention. नहीं, signs we will be adding, right? So for example net tax payable में minus मैंने डाला है and change in inventory में अब अपने आप minus sign आ गया है because we have done old minus and inventory is increased. Creditor will be plus because it is new minus old. That is for inventory. Creditor के लिए new minus. Correct. Then fixed asset in the gross form it's an asset. So again the rule is old minus new. So only take the gross number. Investing में एक ही entry है, so we'll keep it same. Is equal to about. In this fixed asset because it's a gross, sorry, it's asset. So old minus new. So you will see asset addition happening only in the first 2 years. and financing activities same as above. देखिए इनसे तो सम करने की जरूरत नहीं. Okay, debt and equity are liabilities, sources of funds, so new minus old for both debt and equity capital. Minus. New debt minus old balance sheet से E10 minus balance sheet B10. ये इक्विटी कैपिटल. टोटल शेयर होल्डर इक्विटी में पैट भी आएगा तो ऑलरेडी स्टार्ट में काउंट किया हुआ है ईबीटी. So it will get double counted if you take total shareholder equity. Yeah. Hedged equity B6 minus B6 from the balance. Right. Six row is in the balance sheet. You take first number is 227. बैलेंस शीट में पहला वैल्यू कितना इक्विटी का. No, check the formula here. Annual expense P46. Okay. Cash flow statement में numbers look like that. 227 plus in the first year, which is basically that is the money raised. So net change is operation plus investing plus financing. Net change is operation plus investing plus financing. Correct. And therefore balance sheet must have balance. Opening is same as previous closing and closing is opening plus adding. The last cash is coming out to 1165, and if you go back to the balance sheet will be balance. Okay, students online is the balance sheet matching.
Yes, sir.
Correct. Now, in the income statement, if you remember, interest income is blank. So now that you have cash flow, you can calculate the interest income. So let's compute the interest income in the income statement as for the third year. You take opening cash of year 3 into the rate of interest income, which is given in assumption stage 5%, and fix the rate. Opening cash, yes. And you will see a lot of decimal numbers, so just make it into comma style and no decimal. Here is the formula on screen. Last PAT, which was earlier 155 million, has changed to 19. Check if that number is matching. Okay, 190. Now, so we are almost done with the model now. Only thing we want to do is find the IRR and DSC. So let's take a 5-minute quick break, and then we will come back to the returns page. First, we will discuss the coverage ratio, and then we will find the IRR and DSCR for the True. Okay. So let's be back from the break. Uh, yeah. So first thing we will want to do is analyze and present the case to bankers. Okay. So we've seen how to present a case to the equity promoter, but let's see how we can do the same for a banker. Okay. So here is my explanation uh, what the bank will look at. Okay. Now, whenever a bank is giving you a loan, there are only two things that the bank tries to assess. One is your repayment capability, and other is collateral that you can against the loan which will be awarded to you. So repayment capability, collateral is the factory itself. Okay. But the question is, how do a bank assess the repayment capability of a project? Okay. So for analyzing the repayment capability, bank finds what is called as the debt service coverage ratio. Now, what is debt service? So how do you service a debt? By paying the principal back and making the interest payment. So in a given year, whatever amount of principal you are repaying and interest amount that you are paying, both put together will be termed as servicing the debt. Now, the debt service coverage ratio primarily means this: how much debt service do you have to do in a given year, and coverage, that means how many times more money do you have than amount required to service it. So obviously, if you look at DSCR, it is going to be an inflow upon outflow formula. Inflow, आपके पास कितना पैसा है to service the debt, and outflow is the debt service itself. So outflow will be equal to debt service, which means it will be repayment plus interest. Fine. So denominator is clear कि पैसा कितना बैंक को हमें देना है. Now the numerator, कितना हमारे पास है. So the inflow is nothing but you can start with EBIT level, or you can start with that and add back interest. Okay. So we will add interest expense back into it. And the reason why we are adding interest expense back is because we are saying that this is the money that we have. Over and above this, we also have this money before making any payment to the bank. अभी ये PAT जो है आपका, PAT is already calculated after subtracting interest from. And right now we are looking at how much money do we have in order to service them. बैंक को देने के लिए कितने पैसे? तो PAT plus interest है हमारे पास. Apart from that, there are a couple of non-cash charges like depreciation and change in DTL. So these are expenses which have been subtracted from the PAT, but are actually non-cash in it. पैसा गया नहीं है. So therefore you add back the depreciation plus change in DTL. So this is your inflow. So when you find inflow upon outflow, what you get is debt service coverage ratio. So let's say the debt service coverage ratio is 1.5. That means let's say the inflow is 150, outflow is 100. So what is this telling me? This is telling me that in the given year, 100 is the outflow towards debt service. And in order to meet that obligation, I have 150 worth of cash with me. So basically I am 1.5 times covered. 1.5 गुना पैसा है मेरे पास compared to what the bank needs in a given year. Okay, so this is what DSCR stands for. Now, furthermore, the banks will have a entry criteria or eligibility criteria. So banks will say that average DSCR for a project should be at least more than 1.5 times, and this is as per an aggressive lender, and a conservative lender obviously is going to keep the criteria more stringent, 1.75. And the same for minimum DSCR will be more than 1.1, and that for a conservative lender. So when I have a DSCR of 1.5, what it means is I have 50% more money than needed for debt service. 50% ज़्यादा पैसा है मेरे पास debt service. That means 50% is my margin of. So in the lending criteria below that I have mentioned, you will see an aggressive lender at least wants 10% more money in your project. Minimum DSCR your project should have to be at least 10% more money than what is needed for debt service, whereas conservative lender is keeping a handful buffer there of 1.25. Okay. So let's see, based on these boundary conditions, is our project feasible for the 65% money which we are raising in the form of debt. Remember, funding method, हमने 65% debt लेने का कहा है, and remaining 35% is equity. Okay, so let's come to the return page and let's find the DSCR. Now you will see DSCR is the annual calculation. We will be doing it from year 2 to year 12. Okay, so let's start with PAT. Take it from the income statement, match year to year. Depreciation also income statement. E column से ही लेना आप. Deferred tax, change the name here to change in DTL. Again, take it from the income statement, and interest expense also can be picked up from the income statement. Then you can link the interest just from above. Repayment of term loan you will get in annual expenses page, row number 20. Okay, everybody calculate the inflows and outflows as shown, and then we will do debt service coverage ratio again. I have kept the formula of repayment of term loan on screen. Change in deferred tax. So you can take that also from the income statement. See that you are taking everything from year 1, that is column number E. Sum. Okay, got it. Now, for annual DSCR, the formula would be inflow upon outflow. Now, if you put the formula, you will see division by 0 error is coming because the formula is 0 by 0. So, what we are going to do is we are going to use error handling using if error function. So, you put the formula. So, if error function works this way, the first thing it will ask is value. मीन्स आपको क्या कैलकुलेट करना है, एंड देन इट विल आस्क वैल्यू इफ एरर। तो जो कैलकुलेशन आपने किया है उसमें अगर एरर हो गया तो क्या आना चाहिए, दैट इज व्हाट इफ एरर इज ट्राइंग टू से। सो वी विल से कि शो ब्लैंक, way of showing a blank is open and close double quotes. Double quotes you can get as shift and single, जीरो वगैरह भी डाल सकते हैं। Yeah, NA also you can take here. NMF this, not meaning in double quotes however you have to write, because it is English word. So the reason why we are putting blank is because जीरो डाला तो मिनिमम DSCR में कैलकुलेशन में जीरो दिखाने लगता है। Okay. Now we have the annual DSCR. That means we have calculated the DSCR for each year. Okay. And now we will find the highest and lowest DSCR first. Use the max and min function. मैक्स और मीन फंक्शन यूज करके आप हाईएस्ट और लोएस्ट DSCR निकालिए। And what you observe here is minimum DSCR is less than what my criteria was. Minimum DSCR कितना चाहिए था? Even for the aggressive lender you wanted 1.1, but you are having only 0.97. What does 0.97 mean? Means 100 is what you have to pay to the bank, and you only have 97 rupees to pay. तो 3 रुपए कहाँ से आएंगे? तो वो डिफॉल्ट सिनारियो। So bank ideally wants at least 10% more, because remember all these are projections. ये तो हम बोल रहे कि इस तरह से फैक्ट्री चलेगी तो इतना पैसा आएगा, थोड़ा इधर उधर हो गया तो मार्जिन ऑफ सेफ्टी इज रिक्वायर्ड फॉर द बैंक। Therefore reject the project as minimum DSCR is less than 1.1 needed by aggressive lender. So even an aggressive lender will not put hands in a project like this, let alone conservative. Okay. Now another thing is banks will also look at average DSCR. Now when you look at these DSCR numbers, if you try to find the average of these numbers, then that average is not accepted by the bank, primarily because of the first DSCR value. So in the first DSCR value, there is no debt repayment. Because of that, this number is appearing very large, and that is the reason why average, if you calculate, will get skewed because of outlier effect. The DSCR you are saying. Correct. And as well cash flow improves. पैसा भी प्रोजेक्ट का बढ़ता है, बट फर्स्ट DSCR वैल्यू इज रॉन्ग बिकॉज ये डेप्ट सर्विस नहीं है, इंटरेस्ट कवरेज है, इसमें डेट है ही नहीं, रीपेमेंट ऑफ डेट है ही। बिकॉज ऑफ दैट दिस नंबर हैज टू बी नाउ इग्नोर्ड। So what they do, the bank way of averaging is average inflow at the time when the debt is there on the book divided by average outflow at the time when debt is there on the book. जब तक लोन है तब तक ही बैंक को इंटरेस्ट है आपके प्रोजेक्ट में, बियॉन्ड एक बार 9th ईयर हो गया तो बैंक इज नॉट इंटरेस्टेड इन योर प्रोजेक्ट। So average inflow upon average outflow is how banks will calculate the PS average. And this number was expected to be more than 1.5. Again, that has not happened. So conclusion will be reject the project as average DSCR is less than 1.5, which is needed again by the aggressive. Average DSCR needed by the aggressive. So you will see difference between aggressive and conservative lender is somebody like a Axis Bank or IndusInd Bank as or RBL. These have slightly loosened credit criteria in order to solicit more business. Whereas an SBI or a HDFC bank will be typically conservative, which will generally have a very stringent credit criteria. Okay, so 65% funding of the project seems difficult. Okay, because from the banking point of view, project does not look very difficult. Another way by which you can argue or you can adjust this project for a bank loan would be if you consider ballooning repayment. अभी हमने क्या किया है इक्वल रिपेमेंट कर दिया ऑल ईयर्स के लिए सेम बट यू कैन सी योर कैश फ्लो कैपेबिलिटी इज इम्प्रूविंग ओवर टाइम so why not have less repayment at the start and more in the later year. That is why you will see different types of debt structuring in the market. The ballooning repayment type primarily is to accommodate projects where cash flow strength is improved over the later year. Okay. So if this kind of repayment was scheduled for later period, then probably you would have the money to deal with it. Okay. So, so equal repayment debt, obviously, this kind of debt structure for the current project is not. So either you see that you can improve the cash flows, or you see that if you can adjust the debt repayment pattern, maybe the project might just see the light of the day. Still, the cash flow is not very strong. Okay, so you might be able to overcome the minimum criteria, but it will still be difficult to overcome the average because उतना पैसा जनरेट ही नहीं हो रहा है. ठीक है. So that is one. Second, let us look at the project from the promoter's perspective. Okay, now, from promoter's perspective, all you have to do is find the FCF. How do we find FCF? Let's take the CFO, CFI, and change in debt all from cash flow statement. And one additional thing that we have here is reversal of working capital. Let me explain that. But before that, CFO, CFI, and change in all three you take from cash flow. Okay. Change in debt is from, sorry, I've taken CFF, but it should be row number 17, E70, again cash flow. And the last thing is working capital reversal. So let's understand that. So if you look at our working capital, third year our business started, you had 44 million blocked in inventory and 16 came from your supply. So net you blocked 28 million. And as time went by, more and more money got blocked. By the last year, 48 million have been blocked in working capital. मतलब बिजनेस चलाने के लिए आपका कैपिटल फर्स्ट है. What will happen in the 12th year? After 12th year, you will no longer maintain inventory. आप सारी इन्वेंट्री लिक्विडेट कर दोगे, आप अपना पेबल्स जो है वो पे कर दोगे. तो 48 मिलियन जो आपका फंस चुका है बिजनेस 12th ईयर तक, वो रिवर्स, you will get that money back. Therefore, you have reversal of working capital as a one-time gain coming back to the promoter. Take paribatic, liquidation of working capital. How much is the IRR? Sum up all the cash flows, find and tell me the IRR value. So you have to take from row number 42. How much number you have there? No, you must have added. इन्वेंट्री और क्रेडिटर आपने ऐड किया होगा उसको माइनस करना एक करंट एसेट एक करंट लायबिलिटी करेक्ट सब्ट्रैक्ट द टू करेक्ट एंटायर में फॉर्मूला माइनस ही होगा इन्वेंट्री माइनस करेक्ट so IRR is project IRR comes out to 14.6 and cost of capital कितना है 20%. So comment will be reject the project as IRR is less than cost of capital of 20%. One minus 227 to 377. $14.6, which is again not a very attractive return because passive investment vehicles probably can generate some similar return for you. So entrepreneurs' time and effort okay, will not get valued adequately in this project. Okay, so that gives you an entire idea of how a project financing case, okay, full blown case would be like. Okay. Now, I wanted to discuss the importance of building projects okay, or why projects are, but it's a slightly lengthy discussion. So, if you want, we can do it now, or we can keep it for the next class. For the next class, we'll keep it. Okay. So, yeah, online. There is a discussion that we want to do on project financing and its importance, as in how our returns improve. But it's a slightly longer discussion at the time at hand. So, would we want to do it now or in the next class?
So however it is comfortable to you.
Yeah, that is fine with me.
So are we left with anything else in the modeling section?
Sorry.
So like we completed this project right now.
Right.
So we will be doing anything else?
Yeah, there is one more case which is on valuation of a company. That is one we want to do. So in the next class, maybe
Okay.
we will finish that case, or maybe the class after that we will finish that case. So there is a case that we want to additionally do, which is a interview round example for a private equity company. So I'll give the case question to you, and we will try to do it in the class, not as an assignment. So, but that is one additional thing that we want to cover. The, and obviously the discussion that I just now said, which is on why project financing. So let's do one thing. So let's do this project financing important discussion as the first thing in the next class. And there we are not going to make a model, but the idea there would be to see how cash flow structuring is typically done by companies to improve returns. Okay, and we'll get back to some of your theory discussion on capital structure. Okay. And then we will try to complete that private equity case. So that last case that we want to cover, we want to start without a template, okay, and maybe then think over how we can develop the approach, and then likewise want to take it. Okay. So, but before we close today, quickly we will do couple of at least one sensitivity. So you come to the assumptions page, and here come to sensitivity of IRR. Okay. We want to build the IRR sensitivity if your sale rate of sugar changes. So our base case has been 28,000 per ton, and electricity price of 4 rupees per unit. Okay, so this is our base case. So what we want to do is we want to see if the electricity prices further fall or increase, and if the sugar price falls or increase, is the project becoming feasible or not. So we want to build the data table. So step one of the data table was to make the entire model, which we have already done. Step two would be link left corner cell to the IR, the decision parameter. So link it from return set. Now, one of the shortcomings of the data table is that you will have to make the table on the same page where the assumptions are. Okay. So ideally, analysis would have been more easy if you had put this data table on the returns page, जहाँ पे आउटपुट आया है, क्योंकि बट एक्सेल का वो लिमिटेशन है कि जो इनपुट आप दे रहे हैं वो इनपुट उसी पेज में होना चाहिए जहाँ पे डेटा टेबल. Therefore, we have put the data table on the assumptions page. So assumption page पे data table is like the end result, okay, which obviously we have reached to that end result after analyzing those 7-8 pages. So let's do the data table here. Link the IRR to the left corner cell. Select the entire range from the IRR data. What if data table? Tell me the input. What if data table? What will be the cell number for row input? Cell number. What should be the cell number for the row input cell? So we will read this data table as this is the row of the table and this is the column of the table. तो ये रो जो है ये रो में क्या है, शुगर सेल रेट है कि पावर सेल रेट है, रो में इज शुगर सेल रेट. हाँ, एंड दिस इज द पावर सेल रेट. एक यूनिट आप 4 रुपीज में बेच रहे और एक टन आप 28,000 में बेच रहे शुगर. So this sugar sale rate in the model the key assumption is in cell number B22. So in the row of the table, you will put B22. And in the column of the table, we will put B27, which is the electricity price. So that's why I just wanted to show one data table. So kya hai? Then you can make n number of the data tables for an. Okay, these are the answers. Everybody check. B27 रो में है B22 और कॉलम में है B27 in the column. Yeah, B22 in the row. Yes. So we have to tell Excel data table what these numbers are in the model. ये numbers model में क्या present कर रहे हैं या कहाँ present कर रहे हैं? That is what you have to identify. So what you can see here, first of all, I have used conditional formatting here, and what rule I have kept is wherever the answer is more than 20%, which is cost of capital, show the numbers in green. तो ग्रीन में क्या दिख रहा है आपको कि प्रोजेक्ट फिजिबल IRR आपका 20% से ज्यादा है, whereas this is our base case. So from the base case, one of the two things has to happen. Either the sugar price has to increase by 10% more, तो ये 28,000 में 3,000 बढ़ेगा तो 31,000 हो जाएगा, प्रोजेक्ट फिजिबल हो जाएगा, या द पावर सेल रेट हैज टू इंक्रीज बाय 20%, which is 14 का IRR 20. हाँ, matrix of what will be the returns if the input parameters are correct. से 4 का 5 हो गया तो क्या आपका IRR? Exactly. N number of scenarios compared in one go. That's why we call this as sensitivity. And another way you can do is scenario analysis. Scenario analysis where you change more than 2 parameters. In N number, you just make changes in the assumption side and note down the result. Sensitivity may generally 2 parameters. You can have more also, but then you will need little more complex modeling. Yes. And sugar cane cost, let's say. Yes. Can we have multiple inputs and multiple outputs? Yes. अभी इधर कैसे हो रहा है? 2 inputs and 1 output. So 3 inputs and 2 outputs is also possible, but you will have to do a little more complex modeling there in order to get the idea. And in that case, you actually start building scenario analysis. So each scenario will be different inputs and different outputs. But on the face of it, you can see that in case there is any drop in power rate, the IRR significantly gets eroded. And this is precisely what is happening currently in the market. Because of the advent of cheaper solar panels, power sale rate has gone down to 3 or lesser than. As a result, feasibility of sugar factories now only on the basis of sugar price becomes much more difficult. Earlier, the power sale rates were much higher at 5 rupees, 5.5 rupees. So then the sugar factories had a easy go because even if sugar was not profitable, at least power was helping them to become feasible. But now that the power rates are going down, sugar factories are finding it fairly difficult to survive only on the basis of the sugar source of income. So, so the price has to go much beyond 32,000. If the power rate goes down to 3, you will see even at 32,000, the sugar factory is not. So like this, you can analyze different parameters. Same you can do with sugar price versus sugarcane cost. Okay, because that arbitrage is what is going to make the sugar factory uh, a feasible business proposition? No, no, no. Then all numbers will be 14 points. एक्सेल क्या करता है, कॉर्नर सेल में जो कैलकुलेशन है वही वापस कैलकुलेट करके देगा. इफ यू पुट दैट मैन्युअली इट विल जस्ट सेम नंबर. Okay, so any doubts? Everybody on the case? Students online, have you got it? Any doubts, queries, let me know. Or else I will send the file.
Got it, sir.
So let's catch up next week and we will try to first we will try to understand the importance of project financing, and then or we will see basically how returns can be improved, and then we will go ahead and uh, make that PE model, private equity. So next class, if we are done with the model, then we'll complete the same, or one class in, if we complete the model, that's when we will complete the same calculation. Things that I wanted to say. Okay, fair enough. We'll stop here then. Okay, thank you. Thank you all for joining
Thank
in.
you, sir.
Thank you.